Hello everyone, it's Josh from TradingPriceAction.com, and today I'm bringing you guys another currency spotlight for October 17th, 2013. Now in today's currency spotlight, we're going to be looking at three different currency pairs actually. Usually we only look at one, but a lot of things have caught my eye today on the chart, so I want to have a chance to explain them all to you. So the first thing we're looking at is a New Zealand dollar, US dollar 4-hour chart. Now what we're looking at here is, what you see here is a pretty good looking 2-bar reversal right here. Now it's against the current trend, which is up, so we usually wouldn't take that trade, as we should expect price to pull back and keep going with this because it's with the trend, or this 2-bar reversal is against the trend actually. So what we're actually going to be looking for on this chart is, if we zoom out, we can see that we have a nice support zone right at this level right here, with a touch here and a couple of touches here. So if we go back in, we can see a 2-bar reversal. So what we're going to be looking for on this chart is for prices to continue down, touch this support zone right here, or my bullish price action trade setup, and then for the trend to continue back up and for us to enter long right here. So as you can see, the market is in a trend up, and it's been at a steady pace up. As you can see, this is a pretty straight up trend, so it looks like it's exhausting a little bit, pulling back, and this is a great place right here on this support zone to enter this trade long. So this gives us a great way to enter this trend that's looking like it's beginning right here. So that's it for the New Zealand dollar US dollar 4-hour chart. Now I have two more charts on the daily charts. First one we're looking at is the Australian dollar Canadian dollar daily chart. And what I want to look at here is that, just by look at things, we can see definitely an uptrend with a lower low, with a low low, high, a higher low than this one, a higher high right here than this one, higher low than this one, higher high, lower low. So as you can see, this market's been working its way up, and it's currently in a defined uptrend. And then today we have a nice bullish engulfing bar that's formed. Now you're probably thinking it's probably a great place to enter long, as it's with the trend. I'm going to point out something that you guys should make sure you guys watch or look for before you just go enter a trade, because you see a nice trade setup with the trend. So as you can see, it's nearing a very big round number right here, right in this area, with the 1.00. That's a very big round number, and that's the last thing you want to trade into. You don't want to trade into a very big round number. And also, if we zoom out, we can see that there's actually a strong resistance line right there as well, with multiple touches all throughout here. One there, one there, one there. If we go down the chart a little bit, we'll see we have another one right there. So as you can see, that's a very strong resistance line right here, along with the very big round number right above that line. So before you go taking trades like this, which look by its cover a pretty good trade setup with the trend and a nice big bearish bullish engulfing bar, you need to make sure you look at the market settings and see what's coming up in the price's future. So as you can see, it's coming up right on here. So if we took the trade, we'd be trading right into a strong resistance zone and right into a very big round number, and that's something that we should not be doing. Now, if it happens, if prices, I'm going to give you guys a quick little trade scenario that could happen. If prices bust through this support zone, or this resistance zone, excuse me, and then pull back and retest this broken resistance turn support zone, then we can look to go long and go with the overall trend in the market. but until it either breaks this resistance zone right here, we should stay out of this trade as it's too close to this strong support zone and a very big round number of 1.0. The last currency pair we're going to be looking at is a US dollar, Singapore dollar on the daily chart. What I want to look at on this chart is I want to take a look at this bearish bar right here that's formed yesterday's bar and how it has broken this strong resistance zone right here. Now if we look back in the chart's history, we can see why I would consider this a strong support and resistance zone. Multiple touches all throughout here, touch there. So as you can see, this area on the chart has been respected again and again. So now that we see that prices have burst through this support zone, we should assume that now this support zone has turned into a resistance zone. So what we're going to be looking for is for a couple bars, and then for bars to come up here, retest this support turn resistance zone, and then for a bearish price action trade set up to form, and for us to enter short. Now as you can probably tell, this market is in a current downtrend, and it happened to actually just start this downtrend. It looks like it's a fresh trend as we have here, and then so as you can see, it's a fresh trend and it's just beginning. So right in this area is a great place to hop in on this trade while the trend's still young. So that's all for today's currency spotlight. I just want to take a look at those three currency pairs and give you guys something to look forward to and possible trade scenarios that could form. So that's it for today. I'll be back tomorrow for another currency spotlight. Until then, safe trading.